Hello everyone, welcome to this week's weekly market review for Monday the 20th of March to Friday the 24th of March 2023. My name is Vishal. Let's get started. Alright, let's start with the Nifty analysis. It's been a couple of volatile trading sessions and today was no different. Let's start with the monthly chart. And if you look at the monthly chart, we are still within this area of monthly demand. Prices have gone deep inside this level, and now we are right now sitting very close inside this level of weekly demand. Now, what is important over here is that because the prices have gone deep inside this level, most of the unfilled orders now are filled. Now, what is more likely to happen is that because we are seeing these long wicks getting created, they are indicating possibly that there is some buying that is happening at these lower levels. The crux of demand is sitting right here, which is much lower. Now, what is going to be very interesting is that if the 16,753 level does break to the downside, then we might have a very easy path to move towards the 15,900 level. Now, this week, coming Wednesday, we have the Fed news, which is everybody's going to keep their eyes on it. And that is going to create a lot of volatility. Even I'm assuming that tomorrow and on Wednesday, there is going to be a lot of volatility. And then, of course, on Thursday, we are going to see the after effects, to say so. So just be a little careful because markets are going to be extremely volatile. There are going to be plenty of opportunities, just like how they were an opportunity. There were opportunities today, but it's going to be extremely volatile. If we move on to the daily chart now, what is very interesting to see is I'm just going to remove this demand zone from here. Charts look nice and clean. What we are seeing is that we are seeing this level being held. It came in once, it came in twice, it came in thrice, fourth, and today it also made a new low. So a lot of people who are observing this pattern, or to say candlestick patterns, this is more like a doji or an indecision candle. And usually when these candlestick patterns are formed very close to higher time frame support or resistance levels, then a lot of traders perceive these as reversal patterns. All right. Now, today, what the market did was a little unexpected, because if you can see today, the markets broke the prior day's low and also broke the day before that, the low of that candle as well. So in case if a lot of people who had bought on the basis of this candle and they thought that now the market is going to rise and move from this level, most of the stop losses have got triggered today. So this phenomena where people might have kept their stop losses over here, or some of you might have kept your stop losses over here, all these stop losses in today's low got triggered, and after all the stop losses got triggered, the market reversed and created this pattern. And this is pretty much the usual scenario that is happening right now. So basically, this is more or less known as stop loss hunting, right? So institutions are just trying to play with the retail traders and investors' mindsets here. They know exactly where the stop losses are kept. They wait for the prices to trigger all the stop losses, and once all the stop losses are triggered, then the market moves in a very strong direction. And the move today was not a small move. If you actually see, the low that was made today was 16,828, and markets nearly closed very close to 17,000 odd levels, right? So now what do we conclude from this? What I think from here on is we might see a little bit of an upside, but before the markets even move to the upside, we might face a few barriers. So let's have a little bit of a closer look, and let's go to the intraday chart and see what the barriers can be. Here we are already seeing that volatility is slowly and steadily rising up. It was over here in zone 1, now it has moved to zone 3, And I think because the Fed news is coming, so we might even see, this volatility or implied volatility rising up towards the upper sections. Now, if you look at the Nifty on an intraday chart, let's go to a 15-minute chart. And let us see what the Nifty has done in the past few days. So if you look at this overall movement in the Nifty, like if you just have a close look at this entire area of consolidation, let me just use something else here. Right, so this has been that entire consolidation, and what is going to be a little crucial for the Nifty right now is going to be today's low. Right, so today's low is going to be very, very key for the upcoming move in the Nifty today. Okay, and in case if this low gets breached, then we are probably going to be seeing a little bit of a slightly more sell-off in the Nifty. Now there is one more level that I would like to point it out to all of y'all, and that is on the Nifty futures chart. So just be mentally prepared that in case if that level does hit tomorrow or whenever, then you just got to be a little careful, because that level could act as another trap to all the sellers, and you might possibly see the market moving up. Okay, so just let me bring up that level here. I'm just going to draw a horizontal line over here, and let's go a little further down. So currently prices are bouncing from this gap level over here. This is the level which is actually playing out. And today we had a slight breach of this level also. So not a great level, but it's still there. And the main reason is that it is there because if you look at the daily chart, that is exactly where the prices are bouncing from. So 16,762 is going to be an extremely crucial level. And if this level breaks, then we might see an easy fall of the Nifty lower. Looking at the way the candlestick patterns are getting created on a day-to-day basis, that may not happen. And if that does not happen, then at least we might start moving towards the upside. Now let's look at what could be some of the barriers to the upside. So we go to our 75-minute chart. The first barrier for the Nifty to cross will be this gap. So go to the 15-minute chart, right? So this is that gap. And there is a possibility that if everything holds true, whatever happens in the global markets tonight might bring the price to this gap. Now, in case if the markets do open gap up, shorting would be considered to be a little aggressive. But in case if the markets begin to do something like this, then probably you can get into some kind of a confirmation shorts. Like I said, this low is going to be very, very crucial. So in case if the market does open gap up, then your potential target will be first this gap fill. That is if the gap is created tomorrow. In case if the market gaps down and opens flat or opens somewhere in the middle, then probably just wait for a bit for you to get a pullback, and then maybe you can try to go long until this level. Once this level is taken out, once this level is breached, as you can see over here, this is a very, very strong resistance point, and prices have failed to close above this level once, twice, thrice. So there will be one more attempt. If the market does close above 17,200, then we might see markets moving towards this area here, which is 17,400 and 384. Now, open interest, etc., does suggest that we can move towards those levels based on the monthly open interest, etc. But we'll have to see in the coming days. So as long as the price remains below this level, markets will just be consolidating and moving sideways. If markets break this level, more shorts will be aggressively added to the market, which means market will turn bearish. And market will most probably turn bullish if 17,223 is taken out and markets move towards the next level, which is 17,400. So this is how you can gauge the Nifty for this week. Now let's look at Bank Nifty. And comparatively, Bank Nifty has been slightly better than the Nifty. So let's look at the Bank Nifty. So I'm just going to right click and remove all the tools. Let us start with the monthly chart. Again, on the monthly chart, prices are holding on to this level. If you look at the weekly chart, again, not a great level, but it's there, it's still holding. We go to the daily chart. This is where prices have consolidated and have held. Although I still feel that if the market does turn bearish, then we have this this gap level over here, which can also act as a trap, and prices might react from this 38,440 odd level and then give a strong bounce. But anyways, we are going to be taking it day by day now, and right now this level of demand is holding. If you can see very closely that prices have created these candlesticks, indicating that at every selling pressure there is significant buying also that is coming in. So can these patterns lead to something like a breakout? Is time is going to tell that. But other than that, if we go to the smaller time frame, as you can also see, volatility has comparatively increased. And if you look at the 15 minutes chart, so comparatively, Bank Nifty has not been able to break the previous low. So this level is still pretty intact on the Bank Nifty, which means that as long as the price continues to be trading above this 38,700 level, we can slightly maintain a bullish stance, and there is a possibility of a pullback of price where prices can keep on moving up and up and up this way. Okay, so as long as these so this low is defined now, and then you have these higher lows. So as long as these higher lows are not violated, and if price starts to create higher highs, then prices are more or less likely to move to the upside. So from the price action, more or less seems like a little positive at the moment, especially how Nifty and Bank Nifty traded today. So this level is going to be a very, very crucial level for the market, 38,711 to 38,604. And if I just draw a line in the sand here, you can clearly see that the 39,000 odd level is also acting as a very, very strong support. So now there are two things that can happen here. Tomorrow, the market can open flat and it can just continue to trade flat, or the market can start moving down again to try and test the 39,000 odd level. If the market breaks the 39,000 level, the focus will be more towards this area here. Now, this is the area where you need to be a little careful. If you just aggressively go long over here, you might, just face the brunt, and prices might, start turning to the downside. So instead, just allow the price to first break this area. This can be one trade setup to the downside, which is close to around 300 points. That's a pretty substantial move in the Bank Nifty. Wait for the price to create higher highs, higher lows, and that is the time where you want to probably enter this trade and then ride it to either this gap fill or then this gap fill. Markets are likely to turn more bullish once price actually starts trading above this level. So anything above 39,700 odd levels, that's where markets will start trading, more bullish. But at the moment right now, markets are going to be consolidating. And as I said, we have the Fed news. So very, very typical way where markets, tend to remain volatile when, big news is coming out. And then plus you have, a few obstructions to the upside. So we'll have to see how the market, reacts here. But this supply zone is going to be a little bit of a showstopper, to say so. So again, the same way, if the market gaps up into this supply zone, don't aggressively take the short. Just wait for the price to turn and possibly wait for some kind of a confirmation, and then probably you can take the short to the downside, probably closer to these 39,000 levels, which is acting like a support. Let's look at one more index right now, which is Nifty. Let's talk a little bit about Nifty as well. So we'll go into the derivatives tab. Let's look Nifty. Tomorrow is Nifty expiry. So let's go to, we can just look at the 20th March chart. But tomorrow is Nifty expiry, so expect to see a significant amount of volatility on Nifty also. So let's look at the monthly chart of the March contract. And this is more or less a mix like the Nifty and the Bank Nifty, isn't it? This looks much like a mix. So here also we see that the weekly demand zone is still holding, which means that as long as 17,123 is intact, we may not see a big move coming in. But in case if 17,123 breaks to the downside, then there is a possibility that we might come to retest these lower levels close to around 15,794. If the Nifty holds on to this area and starts to move up, let's go on to the daily chart to see what is happening. And here we can see that there are a lot of similarities between Nifty, Bank Nifty and Nifty, where you are seeing very, very similar candles being played out, right? So this is probably indicating that this is some kind of accumulation that is possibly happening with institutions. And at every lower levels, institutions are probably entering and trying to push the market up. Comparatively to the Nifty, Bank Nifty and the Nifty is still holding. It has not breached the prior low, which is a good sign. So both Nifty and Bank Nifty have not breached the lows, but Nifty has breached the lows. And as I said, that this was more like a, like a stop loss hunt for all the traders. And most likely, whenever that happens, the Nifty tends to move in a very, very strong, direction to the upside. Now let's look at the Nifty. If you look at the Nifty again, let's draw the line in the sand here, right? So 17,400 going to be a very, very crucial level. Price has already made a bounce from that level yet. So any time when the price retraces back to the level, there will be some buying till and until the price breaks and then starts trading aggressively to the downside. So I wouldn't take any short positions in this area. Within this area, I would probably take or initiate long positions, and I would like to do that with confirmation. So I'll wait for these patterns, and once I get these patterns, then probably I will plan long trades. If in case the market gaps down tomorrow, the first target will be the gap fill, and that's how I would look at it. This is going to be a crucial level, 17,734. In case if the market gaps up tomorrow and opens here, then I would like to look for some confirmation to probably come again and test the 17,400 level. So this is going to be more or less my trading range for tomorrow. Let's move on to a slightly more bigger picture. Again, Nifty is likely to get more bullish once price closes above this level and starts trading to the upside. Then on the upside, you have a few barriers here, but we'll talk about them when those levels are actually met. So right now, this is going to be a range 17,734, 769 to 17,392, 316. So this week, we are looking at the Nifty FMCG sector. And today, if you look at the overall market, we had one hero, which was Hindustan Unilever. But first, let's look at the FMCG charts and let us see what FMCG sector is telling us. So right now, after moving up, there is a little bit of a consolidation that is happening now on the monthly chart. So no signs on the monthly. If you look at the weekly chart, the weekly level of demand is holding nicely on, although tested, but it's still there and it's still holding nicely. So this is your weekly level of demand. At any given point in time, if prices do come back here, then maybe it's a good idea to look at going long on some of the FMCG stocks. Let's open the chart of Hindustan Unilever and let us see what are the possibilities on this stock. So let's open the chart here. And if you look at Hindustan Unilever was more or less reacting from this monthly supply. And then it came into this level of demand and it has given a strong reaction from there. So the monthly demand zone is in control of price. And right now, today also we are seeing a strong move. This is the weekly chart. So this is your weekly level of demand. And then if you go to the daily chart, this is that daily level of demand from where the prices are playing out. Just in case you might be wondering, how did Hindustan Unilever bounce and move up so strongly? It's right here. So if you look over here now, the market is pretty much bullish. There is no clear level of supply over here. So now, how does one approach to plan a trading opportunity on a stock like Hindustan Unilever? So let's go to the 15-minute chart. And here you can see that price has more or less created a specific pattern here. And if you look here, this is that demand zone. Now, if Hindustan Unilever has to continue to move up, then in most likely cases, it may not even pull back over here and it might continue to do so. If it just continues to move to the upside, then one area to watch out for, in case if you're already long, will be this supply zone at 2574. In case if Hindustan Unilever gaps up straight into this area, then you can possibly look for intraday shorts, where you would expect the price to first open here and then start doing something like this. Okay. So the basis of this stock is very, very clear. If it moves into 25, 74, 87 odd levels, maybe you would want to think about exiting your long positions and then probably start looking at shorts. And if the price pulls back into these levels, then definitely it's a good opportunity to go long. Let's look at the 5-minute chart to see if there is anything interesting on the 5 minutes. There's nothing on the 5 minutes. Let's go to the 10 minutes. So here is that demand level, right? Maybe you can even include this zone here. So this will be more or less one of the opportunities, because if the price does pull back here, then we can expect the price to continue rallying to the upside. So let us see how this level plays out in case if the price pulls back. But now you have a plan where you know that in whichever direction the market goes, what needs to be done. So I hope you enjoyed this week's analysis. We've covered the Nifty, Bank Nifty, the Fin Nifty. We've also covered the Nifty FMCG sector. We also have covered a stock with all the levels. So if you do like our analysis and if you do like what we discuss here, do give in your valuable comments. And if you're not already a Sharekhan Education YouTube channel subscriber, then you can click on the button below and become a member to receive notifications and updates of all the videos that are coming up on this education channel. Take care, everyone. Have a lovely trading week. All the best. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.